Okay, another day, another boring start. I'm starting off on the hourly chart where we saw uh, a new low be made. I can't tell if this is really divergence. It's not enough evidence yet, really. So if I were to only look at this candle and this candle, here's a low, here's a lower low. On the RSI, this is the nature of RSI oscillators. It didn't print a low yet, so it's hard to tell. But if I were to just go specifically, um, just lining up the values, then the RSI down here was 34. The RSI back here was 36. So I guess it's not technically RSI, not divergence. But if on another time frame, I think on the 30-minute it would be. So 28 and 29. So I was on the 30 minutes where it was kind of, so it's very ambiguous. This low versus this low. Now, I don't typically do this. You shouldn't really skip lows. But if you go back on the hourly and you look at this low back here, this is definitely higher. So this is just to indicate that if you can't really identify that kind of stuff, divergence, trend reversals, what trend am I in, it probably points to you're just in a ranging market where everything is messy. And it's going to stay messy until it establishes, it just shakes off all of the ambiguity. So for me, right now, I'm gonna whenever that happens, the smart thing to do is zoom out. And if I zoom out, I do see in the bigger picture that this is it seemed like it tried to trend change, but failed. On the bigger picture, let's on the 4 hour time frame, you can see that it looks like it's kind of channeling into a lower trend, right? It wants to create a channel down this way. The real test of that looks like it'll be down here. Can it break 32? Well, for me as a quarters trader, I would look for it to break 33,000, and then I would look for it to break basically the band below it. And if it breaks that, I would be looking for, and this is on a fundamental scale, this is probably expected to happen sometime June, July, especially with like debt ceiling issues and interest rate hikes and all that good stuff. This looks like it's gonna. It looks like it was gonna. If it breaks down, there is room to go 1,000 or maybe even 2,000 points all the way back down to, I wouldn't even consider a pause until probably this area, previous, yeah, right here ish. So right around the 500. So I'll say it'll go 500, no problem. 500 is a weak number, but it's just the place to look at. Be like, okay, this is previous support becoming new resistance, and then vice versa. So look at the 32,500, but really it has plenty of room all the way all the way down to the 32,000. And you could even argue down to 31.5. It would need some help from the fundamentals to get there, though. That's what I'll say. Right? That's the caveat. Right? If something happens, if like Congress reaches an agreement, if rate hikes are kept the same or even a tick lower for whatever reason, right? They start lowering it by 25 basis points or anything like that. Or they even hint at the fact that they're done raising it and they might in the future start lowering it within by the end of the year or something like that. That will reverse all of this and send the market, all the indices, so it'll send it flying back up. So in order to get there, in order to get down to 32,000, 31,000, it's we would need some help from the news, from the Fed, from everything, right? Oh, a recession hits, something happens, something cataclysmic happens in the another war breaks out or something. Not that I want any of that stuff, but those are the kinds of things that would send it down very quickly, and it would what it would do is it would give it a push off of the edge and let it go down further, and accelerate it down faster. And the path to 31,000, 32,000 has very little resistance in terms of the orders that are sitting there waiting to push the market back up. Very little resistance. So that's what I mean by that. Okay, enough about that. Now, what am I going to do today? Well, I already did. What I already did was, let me zoom back out on the hourly. I like this little area right here. I don't like where it's at, but I do like the formation. Location is meh. Formation is good. Not the best, just good. You got a drop, base, drop. The leg out didn't. It kind of made a new low, but really we were looking to break this one, and so it took two legs to do that. So there is strong momentum here. But as with all of these, there is strong level of support here for some reason. So it is a battle. If you can envision the battle, the buyers, the bulls, are losing, right? Because they're not able to push the market to new highs. They're actually creating lower highs, which indicates that the bears are winning. And that's why I feel there's a good chance it'll pop through. But because, like I said, it's also more or less ambiguous, I'm going to leave myself some room that this could pop back up, and I want to take either this area, the 250, or this area, which coincides both of these little turnaround pivot zones. Or this is a turnaround zone, kind of a reversal. If you zoom in to a smaller time frame, you'll probably find reversal formations right around here. I don't need to see that to make decisions on to get in. But if you're a small time frame trader, that's probably if you zoom in on like a 5-minute time frame, there's probably reversal signals here for candle formation. I like this formation as well. I'm right on the quarter. This drop, base, drop. Nice little doji candle to indicate it's gobbling up a lot of the balance of orders, and then the imbalance has a bias towards the downside. So I like these two. I was iffy about my 425, but I'm not surprised that it never got there, honestly. I wouldn't have been surprised if it broke through either. So the reason I'm not surprised for either of those things to have happened is very simple. It's the same reason, that the imbalance of orders that existed in this area has already been used up. So the imbalance doesn't exist here anymore, which is why if you had an imbalance down here, it would easily break through any barriers that sell orders would have caused, and it would easily have broken up. But if there's a lack of buy orders to even do that, well, it'll never even get up there, right? So this was kind of a long shot both ways. I am not surprised I didn't get in, nor would I have been surprised if it made new highs And if it had broken above this high, I would have been like, all right, I changed my mind. I'm looking for longs now, so long as I make a higher low, and then that's the area. If I had made like a higher low, if it went up here, made a higher low somewhere down here, I'd be like, all right, let me look for a quarter entry near that area to push the market back up. Neither of those things happened. No. That didn't happen. The only the first thing happened, which is I never got picked up in the first place. So that's that. I can actually take that off now because it's messy, and I'm gonna move down this alert to right around my entry point so that I get alerted when I'm in, if I ever get in. Same thing here. I wouldn't be surprised if this never made it up to the 250. These are ways that I miss out on the entries with my particular style of trading, but it's not a big deal. I'd rather be conservative on that front than just try to chase the market back down, especially when it's in a range and we were just talking about how ambiguous this price action really is. So not a big deal. I'll take my shot at my calculated risk shot at 250 and 325. That's it for the day.